Good morning, Trinidad and Tobago, and welcome once again to the Bourse Report. Today, we cover two iconic banks in the Caribbean, that is NCB Jamaica, as well as Republic Financial Holdings Limited. And we look at their relative performances and make some recommendations as to the outlook and the Bourse view on these particular banks. Let's turn to our first graph and see what's happening in terms of the share price movement of both of those companies. If you look at this graph, what you would see is that the share price movement of NCBJ as compared to Republic, which is in yellow, NCBJ in blue, is that in 2015 there was a significant spike in the share price of NCBJ. And that continues into 2016 and in the first month, year to date, of 2017. So very significant uptick. What's happened in Jamaica? In 2015, the market was the highest performer in the world. And so what we're seeing is a valuation uptick for Jamaica across the board because, of course, the IMF is in there. Of course, there has been some progress in terms of economic growth in Jamaica since the intervention of the IMF. We'll talk more about this, but let's go now to our next graph to look at specifically NCB Jamaica. What has been happening? Interest income is up, operating income is up, and even though operating expenses are up, what you are seeing is that income after tax is up some 49.9, let's say 50%, and earnings per share is up 52%. When you compare the quarter ended December 31st, this is the first quarter of the financial year, as opposed to what happened in the first quarter of 2015. So very strong, very positive outlook in terms of what is happening out there with regard to the earnings of NCBJ, as well as you would see with regard to dividends per share, which is at the bottom of your screen here. Let's go to our next graph and take a look at what has been happening with regard to the share price movement versus the JSE, the Jamaica Stock Exchange Index. The first graph compared NCBJ to Republic. We are looking at NCBJ's performance in terms of price movement relative to the JSE. And what you are seeing again, as I already mentioned, the company is pretty much on par with the index. It is higher than the index in 2016, and it continues to be above the index thus far in 2017. Good, positive outlook for the stock. That is the moral of the story. Our next graph shows, if we can get that graph up. Yes, here it is. The valuations, the PE valuations for this particular stock in terms of the price to earnings as well as the dividend yield. What this is saying to you in terms of the yellow line is that price earnings multiple, the price has spiked up and it is jumping ahead of earnings, so that what you are seeing is the price of the stock relative to its earnings has jumped to 9.9 times from a low of 3.6 times in 2014. It is an indicator that the stock is doing quite well. And the blue line shows the dividend yield. Of course, the corollary to the upward movement in price without a movement in a significant and corresponding growth in earnings, you would see the dividend yield, which is the dividend over price, coming down a bit. Still, in Trinidad and Tobago dollar terms, quite good at 3.7%, which is higher than what you would get, assuming that the share price holds. It is much higher than what you would get in terms of your income in the banks and so on, your interest rates. So, good positive story as far as that is concerned. Let's take a look at our next graph. And we turn now to Republic. What is happening to Republic? Well, essentially, there has been a flattening in share price and a slight decline, as well as when you look at the first quarter, This is the quarter September to December, or October 1st to December 2016, as the year end is September 30th in both cases, NCBJ and Republic. We are seeing growth in interest income. We are seeing operating income up. We are seeing loan loss expenses, a significant improvement in terms of the provisioning for losses by way of bad loans. Significant improvement, as you would see in this particular line. Income before tax, it's up 14.3% quarter to quarter, December 2015 to December 2016, and earnings per share up 7.4%. Compare, of course, this to the 50% uptick in earnings with regard to NCBJ. Different countries, very similar banks. You would recall that both of these banks, both of them came out of the Barclays fold when Barclays decided to sell their holdings in Jamaica as well as Trinidad. Both of them were bought out, in one case by the Lawrence Dupre grouping, and in the other case by the Lee Chin grouping. And there has been that progression since then in terms of earnings, in terms of valuations. What's happened with Republic? If you look at Republic, 62% of its earnings still comes from Trinidad and Tobago. And then next would be Barbados. So two economies that are somewhat challenged. So the outlook for earnings growth and so on in terms of Republic is somewhat muted. Whereas when you look at the Jamaican situation, the outlook for GDP growth is about 2%. At least those are the statistics from the central bank. Let's take a look now at the next graph. And that's it for us today in terms of our outlook. Let me just say that our outlook both for NCBJ is neutral, as well as for Republic, neutral, which translates into market perform, it translates into accumulate or hold. That is the case. Look for us on the newspapers with regard to more details about this particular report, as well as on our website, www.bourseinvestment.com, which gives full and extensive details as to our own outlook for these companies. Look for us on the newspaper with regard to our mutual funds under the rubric Bourse as well as Save Invest. Have yourself a wonderful investment week. This is Subhash Ram Kilawan for the Bourse Report.